The markets don't seem to have responded positively to the CBN's decision yesterday, but certainly the Naira has.
Well, yeah, we saw most major or most large caps trade slightly lower today, with the exception of Nigerian breweries, First Bank and Guarantee Trust Bank. Most of the other largely capitalized stocks were down. Zenith Bank, UBA, the likes of Guinness really weighed on the index. I would venture to suggest that the declines we saw today might not be unrelated to some market participants just kind of taking profits after some of the rally, the slight rally we've had in the last few days, to position themselves into the fixed income and money markets, which are looking more attractive right now after the CBN has hiked rates. Tomorrow specifically, we have a bi-weekly T-bill auction, which the indicative yields have come in quite much higher than we've traditionally seen in the last 2 to 3 months. So the sense we get is it's very attractive for some of the market players to kind of rotate out of equities into money market securities right now.
All right, let's get a sense of how some of the inflation-sensitive stocks would have responded to this interest rate hike. Absolutely, the banks will have some kind of repercussion, but also the consumer goods stocks, where ultimately investors or consumers drive sales and performance. How have they responded?
Well, we've seen them trade a bit mixed today. Our own outlook in-house is that these stocks are likely to bear the brunt of this, of the two things, the interest rate hike and the weakness in the Naira. And on the interest rate side, they do a lot of borrowing, sometimes to finance capital projects, and at the same time, they do a lot of borrowing to finance trade. So a lot of the players in that space who do borrow and have their interest rates reviewed on a quarterly basis are likely to take a bit of a hit from the hike in interest rates. On the other side of it, Nigeria is a very import-dependent country, so we would expect that a lot of the importers might be exposed significantly to the weakness in the Naira. We would expect this to affect primarily top line, as they might have to push over some of the cost of their goods to consumers. Obviously, that would reflect in the lower volume sales. And that's just really our outlook for that sector right now.
Mandela, the Naira looking a lot better today at 158 Naira. Yesterday it was trading at 164. And just the sort of the depreciation and the pressure we've seen in the Naira, will this MPC decision reverse that? It's happening today, but will that trend be sustained?
The sense I get is that it's likely to be more of a short-term impact. The initial reading of the market is that capital flows might support the index might support the Naira index only for a while. You're going to get a likely flush of cash from the CBN decision to bring down the NOP for banks. But that's really all short term. At the end of the day, what really determines the central bank's and central bank's ability to defend the Naira and ultimately the direction of the Naira is just going to be the level of reserves. As long as reserves fail to continue to accrue at the levels which are sustainable and keep the Nigerian dollar reserves well above 30 billion, I think we're just going to continue to see pressure on the Naira. We're going to stay at these levels in terms of demand, I suspect, into November, as a lot of the importers are bringing forward their demand to buy goods ahead of the December festive season. And as long as the government and parastatals start to ramp up expenditure towards the end of the year, it's unlikely that we're going to see reduced demand at the WDAS. And these measures taken by the CBN will help the Naira, but I just think only in the short term.
Now, obviously, you've spoken about the fact that the Naira will continue to see some pressure. There'll continue to be high dollar demand. Let's talk about structurally what happens in the forex market. Yesterday, we heard the governor mention that, fuel importers account for something like 20% of the dollar demand on the wholesale Dutch auction. And then he was also quite critical about how they're trading, and he basically suggested that there's a bit of rent-seeking behavior, there's a bit of speculative activities. You know, in the midst of the kind of currency volatilities that exist internationally, and in the midst of importers really genuinely requiring US dollars, how is the trade going to play itself out?
Well, I think marketers and any market participants will take advantage of whatever sort of leeway they're given to make profits, whether it be in the form of rent seeking or whether in the form of speculation. It's only a natural response to markets, and you're going to see that anywhere in the world. As far as the CBN governor's comments on imports of petroleum, I think those comments are right. Nigeria imports significant amounts of its, well, pretty much all of the petroleum we use, and you know, being slightly readjusting that our current demand to, or our current infrastructure position to make our refineries produce more, or at least supplement the foreign demand with domestic demand might help the naira somewhat. But I think ultimately these are really long-term issues. And as long as Nigeria remains the way it is, and we have the structural bottlenecks in terms of power and infrastructure constraints, which have, you know, just kind of crippled domestic production, we're going to continue to be an import-dependent country. What I would suggest is more flexibility with the Naira's band, something along the lines of what the IMF had suggested earlier on in the year. But I must admit that the governor was completely right about all the concerns he raised yesterday.